Welcome to the Capital Spreads Weekly Update. Today is Wednesday the 9th of February 2011. And it's been an interesting week. We saw earlier on that China increased their interest rates in a bid to cap inflation, and usually you would expect the markets to sell off after such a move, but that hasn't been the case at all. And that's also that the market has been particularly strong so far, and that's also in the face of an increase in the bank levy from the coalition government. But investors have really been focusing on the good news, and we've had relatively good corporate earnings so far. We've got a merger between London Stock Exchange and the Canadian Stock Exchange. So all in all, the markets have pressed on, and the FTSE has closed at its highest level for 2011. Meanwhile, the other indices, such as the German DAX and the US indices, the Dow and S&P, have been pushing to new 2.5-year highs. And all in all, the markets aren't actually now all that far off their all-time highs. DAX some 10%, FTSE some 12%, and American markets are around some 15% off their all-time highs. So it wouldn't seem all that far away. So having a little look at this FTSE chart, we can see that recent retracements ever since this uptrend commenced in July last year have been around 6 to 4%. In August last year, 6% from high to low, the same again for November, and also in the recent retracement about 4.5% from high to low, and the market bounced off nicely from 5,800. So it would certainly seem that this little uptrend is still intact, but our clients, interestingly, have continued to oppose the recent strength in the FTSE. They remain short of the UK index, and they remain short of the US indices as well. They were even bigger sellers last night and have just taken a bit of profit in the FTSE this morning. On the currencies, clients are quite long of the dollar. So they're opposing the yen, so they're long dollar yen, and they're short euro dollar. They're also, interestingly, short the Australian dollar against the US dollar, which obviously has appreciated considerably over the last few months. So clients just expecting a retracement there and a bit of a recovery for the dollar. No surprises for gold. They are long gold, but also yesterday, interesting, we saw some fresh buying in gold as the market really strengthened back through the 1350 level, currently around 1363. And on the oil front, again, there's a bit of a mixed bag. They're short the Brent contract, but long the NYMEX contract. So for the rest of the week, really the focus will be on tomorrow's interest rate decision from the Bank of England. There is also initial jobless claims in the US, the weekly figure tomorrow, and then we finish off the week with producer prices, which are expected again to show inflationary pressure on producers, both input prices and then passing on their output prices. So we'll watch those figures keenly. And the theme of this week will be the interest rate decision tomorrow from the Bank of England, very much firmly between a rock and a hard place. They have to tackle inflation, that's their job, but they can't raise interest rates right now. The political pressure is too great. We saw earlier that the GDP numbers were terrible for the UK. That's Q4 GDP numbers actually showed a retraction in growth. So it's very, very difficult to raise interest rates when you've got an economy that's shrinking, and also an economy that faces faces government spending cuts later on this year. So it'd be difficult to foresee any sort of interest rate hikes until at least the Bank of England has seen what results from the government spending cuts. If growth can maintain itself, we've seen at least some of the service and manufacturing data indicate that we should see a good bounce back in growth, but really it's probably too early to start raising interest rates, even though inflation is high and we're seeing a few more hawks on the committee. So that's the theme of this week. As ever, do give us feedback, media@capitalspreads.com.